Welcome to RMB Africa Focus, a dedicated series that will focus on Africa's economic resilience and strategic role in global economies. Climate effects on Africa are real, and we have to build Africa's resilience to climate change and ensure we do it in a clean and inclusive way. Despite contributing less than 3% of global carbon emissions, Africa faces severe climate impacts. Africa's potential in renewable energy, impact investing, and climate finance presents a massive opportunity for sustainable economic growth. For more on this, we are in conversation with RMB expert Beth Rivett-Carnac. Beth, you are a fountain of knowledge. So talk to us about how Africa is positioned to benefit from the increasing focus on sustainability.
Thanks, Crystal, and great to be chatting to you. I think a lot of people focus on sort of the negative consequence of climate change, and I think it's very well established that while Africa only contributes around 3% of global greenhouse gas emissions, it's the continent that's expected to be most adversely impacted by climate change. And I think we see that through the heat waves that we're having, flooding. I mean, recently Botswana had those terrible floods that displaced about 5,000 people. Zambia is obviously in its worst drought that it's seen in the last 4 decades. So the impacts are real. But I think people then lose focus on the assets that Africa has that really position us well for a sustainable growth path. And I think, some of the things that come to mind are we have the youngest population. Our median age is less than half that of Europe and the US. We have around 60% of the world's global solar resources, 30% of minerals, lots of which are the critical minerals that contribute to the transition. And we have around 15% of global forests, which obviously contribute both from a carbon sink perspective, but also offer adaptation opportunities for the continent.
Definitely, there's a lot happening. But of course, finance is an absolute crucial point. Talk to us about how this can unlock different climate projects.
Yeah, I think maybe to start on finance, what are some of the challenges that we face? And then maybe what some of the products are that help to try and bridge some of those challenges. So I think obviously the biggest challenge is that Africa needs to about quadruple its climate financing in order to achieve the country's NDC commitments. A lot of that financing in the past has come from global DFIs who obviously have limited capital available. So we need to grow private sector participation in the financing opportunity. And I think a lot of the beneficiaries of the climate finance are also struggling with over-indebtedness. And a lot of the products to date have obviously been debt-type products, which don't contribute to helping that dynamic. So I think those are some of the challenges, but I think, how do we think sustainable finance helps to bridge that gap? I think what sustainable finance has done is really very quickly develop international best practice and principles that establish a framework for borrowers or issuers to raise funding in a format that is very familiar to investors, regardless of where they come from. And so it offers a good transmission mechanism for capital to flow from the global north to the global south. I think there's also a lot of principles around sustainable finance that give investors comfort around the use of the proceeds. So, in the sort of pre-issuance space, borrowers put together frameworks that are aligned to international best practice. And there's an external independent verification to confirm that those frameworks actually do align to what the international principles outline. And then similarly, post-issuance or post-debt raise, there's a lot of focus on transparency and impact reporting so that investors can see that the funds have actually flowed to the intended purpose. And there's also, again, that independent assurance on either the use of proceeds or sustainability performance that gives investors comfort that it's not just borrowers saying they've done what they should. There's a layer of independence in terms of verifying that that's actually what's happened. So I think those are sort of some of the key principles that are helping to bridge this gap that we have. And I think also there's a massive focus in the market on innovation. And I think that innovation is looking to solve some of these specific challenges that have been identified. And how do we innovate around that and enable scale?
On that innovation, so the African Development, of course, introduced green shares aimed at mobilizing resources for the continent. What's your view on this and also the innovative financial instruments that some countries have introduced?
Yeah. So, I think any innovation is great. And I think where there has been innovation, I think the party should be open to replication and scale, because I think taking something that's been tried and looking at, okay, how do I make this relevant in my own market, and then how do I create opportunities to scale, because ultimately the innovation is only really beneficial for the continent if we can achieve that scale and bridge that funding gap. So I think great innovation. I think other areas that we're seeing it, so, in the traditional sustainable finance product set, so kind of more scale side of the spectrum, it really started with sort of green bonds and loans. Obviously, we've seen that diversify into different use of proceeds categories, be it social or sustainable. But then also increasingly, we are seeing issuers and borrowers come to market on thematic bonds in relation to either environmental or social themes that are either relevant for the market in which they operate or something that we know investors are prioritizing. So, for example, we've seen gender bonds or gender-linked bonds, which obviously direct capital towards women and women-owned businesses typically. But also increasingly seeing water bonds, because water is such a massive theme in the sustainable finance space at the moment, or biodiversity bonds. So seeing innovation in specific use of proceeds type instruments. Another area that we're looking at is, while carbon credits aren't anything new, the market has been around for a very long time, since the early 2000s. But looking at ways of leveraging carbon credits in traditional financial solutions. So, for example, a carbon credit-linked bond. An issuer can issue a bond and then offer investors carbon credits in lieu of cash coupons. So obviously then bringing sort of a real revenue opportunity to a borrower or a sovereign to replace some of the cash funding costs that they traditionally see in these types of structures. And then I think on the sort of more impact side of the spectrum, massive increase in focus in blended finance, which is quite a big term, but essentially looks at ways to bring together concessional providers of capital, so be that developmental finance or philanthropic capital, with private capital providers in a structure that enables both financial returns and impact. And I think particularly in the just component of the transition, we see blended finance playing a massive role. And there are lots of different ways to put these structures together in order to balance the needs of all the different stakeholders and ensure sort of an equitable outcome. But yeah, those are kind of some of the innovations that we're seeing in the market.
So, Beth, often we hear African leaders, governments always complaining that there's a need for financing. There's a financing gap. They need affordable financing. Talk to us about this, and how can African countries really fully leverage all the different climate facilities that you had mentioned for their specific needs?
Yeah, so I think some of the key ingredients to achieving scale, in addition to some of the points I've raised about replicability of ideas that have been tested elsewhere, is obviously making those solutions relevant for the local context. So I think there's international principles and thinking that guide a lot of comfort around the products for investors, but then it's making sure that those are fit for purpose for the context in which those solutions are being delivered. A lot of it is also around building local capacity and capabilities. I mean, I think it's been identified that the private capital markets need to play a much bigger role. In order to do that, you need to build local capacity and capabilities. So whether that's sort of E&S risk management within the borrower, or it's around the sustainable finance capabilities that exist in the market. We've talked about the verification and assurance process that's critical to these types of transactions. Can we build local capacity to deliver those types of solutions in order to really enable scale, obviously in a cost-effective way? I think, always enabling legislation is supportive. So whether it's legislation that provides the carrot or the stick, I think both have a role to play. But, for the carbon markets, a lot around Article 6 readiness is critical to getting that compliance market going in country. And that will support both sovereigns and companies operating in those markets to access the carbon credit market. I think we've chatted a bit about risk mitigation enablement. I think that the global DFIs are trying to shift the way they support these types of transactions, not providing all the capital themselves in a capital scarce environment, but maybe looking at playing different roles within a structure to crowd in that private capital that we said needs to really grow to unlock the capital needed. And then I think also this point that we started with about changing the narrative, about saying that there's a lot of opportunity on the continent. We need to make sure that global thinking about how principles apply considers the African context to make sure that we're well positioned to benefit from it. But we do believe that there is a lot of opportunity in Africa, and we need to make sure that that's positioned correctly to the international markets.
So Beth, just lastly, obviously the challenge to date has really been about financial solutions that really prioritize the just and social elements in transitions. So talk to us about what is really needed to unlock this and really support inclusive and different aspects for Africa's just transition.
Thanks. So yeah, I think a lot of the focus to date has been on the climate component, and I think there's a lot of different reasons for that. I think the definitions around what constitutes green are very universal and very quantitative and very well understood. So it's very easy to translate a green investment opportunity across different jurisdictions. I think social is so contextual and requires a really deep understanding of what those imperatives are in the local context. So I think it's really important to ensure that you are designing fit-for-purpose solutions that take that local context into account, leveraging expertise and specialists that are on the ground and really understand the markets in which they operate. For example, a key component of the just transition for South Africa is ensuring that displaced workers have access to economic opportunities, given that the bulk of our coal operations sit in Mpumalanga, and how do we create opportunities for participants in that structure, whereas Kenya is prioritizing universal access because their grid is nearly 100% green. So the just component looks different in different markets, and I think making sure that local context is appropriately positioned within these international frameworks that I said help provide comfort for international investors that the proceeds are being used appropriately is critical. I think you would have seen also, certainly global FIs have been very vocal in putting together sort of sustainable finance or transition finance facilitation targets. I think maybe being a little bit more explicit or granular around what contribution to that comes from social type transactions or predominantly social impact or just impact transactions would help focus institutions on achieving both the green and the just transition. And I think, important to also make sure that solutions align to national development priorities. I think, again, back to that context, it's different across different jurisdictions, and that sort of macro umbrella needs to be taken into account in how we think about financial solutions. And then I think there's a lot of opportunity, even just to start by including more social KPIs in sustainability-linked instruments, for example. So, a lot of the offshore market have just environmental KPIs, but I think there's a lot of opportunity for companies or sovereigns to think about what are the social development priorities that they can positively impact and how can we track and measure against that, or even just through social use of proceeds instruments. So some of the bonds we mentioned about gender, but increasingly, obviously access to infrastructure, access to essential services. These are all important social themes that can benefit from the sustainable finance structures in order to achieve the impact that they're looking to deliver.
Thank you very much, Beth. In Africa, innovative financing mechanisms are pivotal in supporting both renewable and transitional energy solutions, empowering communities to shift toward cleaner alternatives.